Alright, so a lot of shit happening with stocks this week. GameStop, they talking about stock split. Now, if you don't know what stock split is, that's when the price of a stock, usually it gets cut in half, and then the shares outstanding then doubles. So at the end of the day, it all balances out. Nothing's different. And people think like, oh, they're doing the stock split, should I invest in them now? I mean, if you are on a platform that only is investing in like fractional shares, then alright, that makes a difference for you. But it's 2022. All these platforms got fractional shares already, so it's not making a difference. Now, Amazon, they talking about unionizing and shit. They've been talking about that since last year. They had a little vote. It was COVID, so it was like they were sending in their votes, and they thought Amazon was on some sus shit because they actually ended up not voting on unionizing, which is kind of weird. But now, boom, it's official. In NYU, these factories are unionized. Not a great sign for Amazon, but hey, they ain't gonna affect their company probably like that. Now, weed in the federal aspects of things, not the state. It's on the big come up. The U.S. House of Representatives, they finally officially passed the federal cannabis legalization bill and more act, and weed stocks, they responded to this news, especially Tilray, who's giving out earnings pretty soon. Shit jumped a decent amount. It was at a low of 4.78, and now it's around like 7.8. That's almost 50% higher, you know? I mean 50% higher, 100% higher. What am I saying? Some Wendy's in the metaverse now too. Not Sandbox, that shit in Decentraland. They fucking with Facebook with the shit to the 50, you know. So it just shows that the metaverse is on the come up, and it's not just little guys in this field. It's Wendy's and all these big names are hopping in, bro. And Robinhood, these motherfuckers, they love these kids gambling. They open up their hours from now 7 a.m. to 8 p.m. So after hour and pre-market is just y'all can throw your money. Now investing in during those times is obviously more volatile, more risky, more reward usually. And these type of motherfuckers investing like that are these new retail investors on Robinhood, you know, just exploiting these kids gambling. It's a damn shame. But hey, it's a good app. So Five Below. Some people might think this is a good hedge because of inflation and just the economy going out of control, because everything there $5 and below. But I don't know. Really, Five Below is down 20% for the year. Before COVID, it was at like $115, but then it skyrocketed all the way to $237 per share. Now it sits around $168. Now for their earnings, they beat it. Their expectations in EPS, which is like a little habit for them because they've been doing it the past 4 quarters too. Now it reached 2.49, 2.48 was expected, and it was only at 2.2 a year ago, so it showed a little growth there. Now revenue, they missed expectations by 0.87% and only hit $644 million. And a year ago it was at $858 million, so it's showing a little slowdown in revenue. That's not really good for the company. Now Micron, this is a nice tech company. As you can see in this little chart, its price target is always above its price, and right now it's at a little discount, down 18% for the year. Before COVID it was at 60, then it reached 98, and now it's around 77. So if you want to hop in, it's a nice little time. It's not at the top for damn sure. So now they beat expectations by a decent amount in earnings. They only expected 1.95, it hit 2.14. Now that's compared to a year ago, it was at 0.98, 99.1. Look at that. Now they also beat expectations in revenue by 3.67%. That's a nice little surprise there. Revenue hit $7.79 billion. A year ago it was only at 6.2. So pats on the back to this company. Look at them doing their shit. Now Lulu, a little retail company mainly for females, you know. They love the workout gear. They love overpricing it too. Now, their return on investment capital shows that shit. Look at this. Ever since 2010, that shit was a decent amount higher than Nike, Under Armour, and Adidas. Now, Their earnings, though, so-so. They beat expectations in earnings. Only expected 3.27. It was 3.37. And a year ago, it was only at 2.58. So that's a nice little growth for them. Now, they missed the expectations in revenue by 0.28%. Revenue only hit $2.13 billion. And a year ago, it was only at $1.73 billion. So that's a nice little growth, too, in revenue. Now, out of all these stocks that gave out earnings, Lulu, they shot up the most because of their earnings. It went up probably around 9-10% after reporting this. They're only down 2% for the year. Before COVID, they were at 250. Now they're at 384, and they was at a high at 485. So it looks like they could climb back up to there, Chewy, controversial company right now. It's a great company to be in during COVID. They over here shipping their little pet supplies and shit, but COVID's not really like that no more. Everybody going out to get their shit from Petco, and Petco also got veterinarian shit and all that stuff. So if you want to invest in a company, I would say Petco. Look at Chewy's earnings, man. They got a loss of 0.11 per share. They only expect a loss of 0.07, so that's not good. A year ago, they had earnings of 0.11, so slowing down for the company. Now, revenue also missed that expectations by 1.58%, only reaching $2.39 billion. And a year ago, it was only at 2.04, so not a lot of growth there either. Showing these COVID companies, it's not their time anymore. I hope you guys trimmed them, So Mccormick, I've been watching this company, and really they haven't been moving that much. So that's a good sign for a stable company, Before COVID, they was at $85. They hit a high of 107. Now it's at 101. They're up 5% for the year. And they just gave out some earnings, and it was decent. They expected 0.59 of earnings, and it hit 0.63. So beat expectations there. And from a year ago, it was at 0.72. So it's a little slow, but same area, same little range. Now, revenue, they also beat expectations, and by 5.5%. That's better than all these other ones I was giving out earnings this week, They hit $1.52 billion, and that's better than the 1.48 from a year ago. So, growth in revenue. That's good, that's good. Now, the main reason why we're in Mccormick, because, it's a safe little company, consumer defense, not just that, got a nice dividend, but not just that, consumer behavior is changing. Now in 2022, this chart's showing what people are spending, how to spend their money. And the main thing they're going to spend their money more on, groceries. The main thing they're going to spend their money less on, going out to eat. So, hey, with prices of meat and everything going up, they still got spices. Everyone's going to need to buy spices. And McCormick, the main top dog in this industry. Look out for these guys. Now, Dave & Buster's. Before COVID, they was at 47, but this was not a time for little entertainment and going out to eat type restaurants, and that's what Dave & Buster's is. They just recovered, hitting 47 around now. So they're actually up 20% for the year though. So it's showing this could be their rebound time right about now. With earnings, they didn't meet expectations. They expected 0.61. It was only 0.52. And that's better from a year ago, though, with a loss of 1.19. And now, they also didn't meet expectations in revenue. They expected $364 million, and they got $343. But hey, a year ago, they had $116. So they're showing growth in these stuff, but they're not meeting expectations. Not the growth they was expecting, really. And really, there's better options out there. But hey, all my suburbs, bro, they love talking about Dave & Buster's happy hour and shit, so check them out.